Hello, dear viewers. I'm welcoming you all from Triple Pips. Now, we usually post our updates, and the last week, from last Wednesday, we haven't updated you because of a little bit vacation time I was on, and from there wasn't any a little bit of network, so that's why I couldn't connect you. But now, as I'm back, so I hope I can offer you some insights or my point of views to you so that it can helps you to figure it out and categorize your trading plans. So for today what we are seeing is that we have a high impact news on FOMC. My location, it's on 1 a.m. Thursday, but eventually it's on the US station, and US station on Wednesday. And before that, on the US morning session, we will try to trade on ADP non-firm employment change, through which we have our own, have some prediction model input. And from there, we are seeing that there's a high chance that the price may increase more. And if it's greater than 164, then US dollar is super strong. And if not, then if it's less than 148, then US dollar is moderate weak. Now we have to consider both kind of scenario on buy side and sell side, because it's FOMC. A lot more jerking can happen, as we can see that in these liquidity zones for some couple of days the market is been kind of like behaving like a choppy, uh, you know like on 20 ninth we have seen rejections from this level. Yes, not one time, two times. And later on we have seen that the price touched on the lower of this level to the high, and then even rejected back. Now it's on a verge of kind of like thing that uh you know it's also right now, if is sideways if we go a little bit on the smaller time frame. We'll see that. And eventually from today's Asian session, gold was a little bit uh you know bearish, and US dollar was strong. And because of that, we can say that uh, these levels need to be considered. But there is a technique how you could use these levels. Usually when I draw these levels, these are important and potential liquidity levels that can actually touch, because in previous times what we see, a lot of people actually asked me that your analysis wasn't correct, it actually didn't hit the TP. Well, yes, it's true, but if you see the level, and if you know how to use that, I hope you can be very much profitable. Let's just see on this previously acclaimed position, the price actually hit this level and then get back. Now the technique is that you don't actually need to get your bull run in the very first time. The levels need to break, then it needs to retest and then come back. And when it's come back, then you're gonna put your buy interest. So just like this, we have put our buy interest from this level, which is to 2023 on 20 January 23. Now when it actually touches this level, we will not put the entry. It goes a little bit bullish, then again bearish, and when it retest and retouch the level once again, then only we will execute. Otherwise not. Otherwise, even if the price hits the target level, actually that doesn't matter. What matters is this retesting. Now similar thing goes for in these levels too. We uh, predicted our buy move from here. Now from this instant, if you check on your buy move, it will not be kind of like valid, because it needs to be retest, right? So on the first touch, no. On the second touch, yes, you can, but you need to consider the sessions. And if there is any news comes positive, then obviously this buy is not valid, and which actually did on January 24. There was a news and it was positive, and market acted like this afterwards. Now later on, just moving on 29th, we see that that the price level touched on 30 January, which is yesterday. right, on this level. And according to our that time prediction, we can see that if the price reaches 2040, then there's a high chance that it can go bearish up to 2023, right? Now, what we are seeing is that it actually did. The price hit nearly 2050 levels, and from 2040, if you execute any bearish orders, then there's a high chance that you can get a little bit, more bearish profits. Now, that's the technique that I actually want to share you. That don't execute your trades on our levels on the very first touch. Wait for the second touch and retouching. Okay. Now, today, what could be our views on FOMC for gold? What we see is that there has been a high amount of liquidity zone over here, and it's need to be retouched again. Now, as our 2035 levels has been retouched, we are expecting kind of like downwards movements to this zone 2031 to 2033. Grab some liquidity from these spikes, and then when it again crosses 2035 level, then only we will try to execute a bullish trade. Otherwise, not. Now, for the sell side, if the price moves more, like let's just say like this, yes, kind of like more bearish, then we will try to put our sell stop if the price retested back again to these levels or these zones, and then go and then execute and move positions on the bearish side. So on the sell side, the target starts from 2030 to targeting 200 pips up to 2020 levels and risking 60 pips up to 2036. For the buy side, we have already been seeing that on 2035 levels, from 2035 levels, our target is to reach up to like 50 pips above up to 2050 levels, with a risking only 60 pips at 20 to 9.5. So that's all from us for now. Stay tuned to us if there is anything you want to ask or share or want to know more. And hopefully, we will all have a happy, profiting day on FMC. So stay tuned, guys. We will catch you back again later. Thank you so much.